John Wilkins, founder and president of Boston-based Wilkins Investment Counsel, says to avoid bonds now.
Well, the Federal Reserve has basically brought interest rates down to 60-year lows. You know, the 10-year U.S. government note today is yielding 1.98%, and short-term rates even less than that. And the investor is accepting a negative real return when you consider inflation today. Inflation rates, the last CPI number was 3.6%, so if I'm buying a 10-year bond at 1.98%, you can do the math. That's about a 1.6% negative real return. That's before taxes, and that assumes inflation doesn't go any higher.
Wilkins is also bearish on bonds for the foreseeable future.
Many investors today have been buying bond funds to get incremental yield, and at some point those bond funds will lose some principal value as the yield curve returns to more normal levels. And a 10-year bond, let's say the 10-year Treasury, if that were to go to 2% from 5%, which is not out of the question at all on a normalized rate, would have a pretty dramatic impact on many bond funds. So we're encouraging investors when they use bonds to stay short 1 to 2 to perhaps 3 years, and to have also keep excellent short-term cash liquidity so they can take advantage of the better bond prices, which will be coming along when that happens, whether it's 2012 or 2013. We're not smart enough to know, but it will happen.
Wilkins describes his firm's stock selection process.
Well, we're long-term investors. We've always tried to find companies with some distinctive competence. That is, they do something better than someone else, and they can do it on a long-term basis, and they have honest and ethical managements, and they're well-financed, preferably even self-financed. So they don't have to borrow little, if any, money, and have diversification across industries and size of companies. We also look for companies that have the wherewithal to expand in the selective growing overseas markets. That's helped our results a lot.
Wilkins singles out 2 long-term holdings that are representative of his selection process.
One would be the Sigma Aldrich Company out of St. Louis, which makes thousands and thousands of small ingredients for pharmaceutical research, be they fine chemicals, reagents, catalysts, or the many other products that go into pharmaceutical and biological research. Another example would be the American Tower Company, which we again have used over the years, which is currently becoming an REIT. That's another matter, but they own the radio towers which transmit the wireless signals.